So going into the charts today, all you guys need to know is that this gap right here is an hourly bearish fair value gap. These yellow lines indicate my macro session. So before entering the ICT macro session, we have already inversed this hourly bullish fair value gap. Not with huge or strong displacement, especially on a 1 minute chart. That's something to take notice of. We didn't inverse it with huge strong displacement, but we did inverse it on top of being above previous day low, on top of being above Asia's low, on top of being above London's low, and on top of being above Asia's high and London's high. So this is showing me huge momentum, huge bullish momentum, letting me know that the buyers are in. And from my experience looking at the market, it is also just a really valid continuation model lining up. Right, my draw on liquidity right now is currently going to be these previous day highs, because all of the major liquidity pools or PD arrays that I use as a basis for price to draw towards have already been mitigated. So that's why my draws on liquidity are resting above. I have a bullish bias right now. I believe that the buyers are in, and I want to go long based on everything that I just indicated. So that's what's going on today. Now I'm looking at this bullish fair value gap, but I'm not really interested in taking it, honestly, because I'm looking for a fresh bullish fair value gap to form during the macro. So now we can see better what I was referring to when I was saying that we was inside of an hourly bearish fair value gap. This is what we were looking at, right? Hourly bearish fair value gap. Asia's highs are right here. London's highs are right here. Asia's low, previous day low, previous week low, and we're just above so many things. But I am taking notice that we are inside that bearish hourly fair value gap. That's why it's imperative that I'm waiting for a fresh bullish fair value gap to form during my macro instead of using ones that have already been created, because I want to make sure I have enough bullish support to go and counteract against these bearish PD arrays. And I want to make sure that the bullish support that I have is going to give me good, like, algorithmic strength. You know what I mean? I want to have time on my side as well as the technical analysis and market structure, especially with it being a no news Monday. So I was definitely looking at this sale, but for last week I learned about going counter trend. I don't want to take sales against all of this bullish momentum right now unless I get really, really bearish algorithmic signatures, right? So we've already inversed through this bearish hourly fair value gap, but as we can see, as the macro gets started, this 945 candle is like a basically like a pin bar, or just like a doji. It's a candle showing like indecision. But we do have some bearish displacement with a bearish fair value gap. The main thing that kept me from not even considering this sell is the fact that, number one, I'm bullish and I don't have any draws on liquidity below. I could draw toward like maybe this internal liquidity right here, but it wouldn't make sense for me to have a draw on liquidity towards internal right here and take the trade to this internal liquidity when I can, and I don't have like any really strong draws outside of that, when I can just wait for price to come to one of these internal liquidity pools and then trade toward my draws, which are really up here. I don't want to just win a sell. I want to see price go toward my draw on liquidity and, reinforce my conviction on that draw. It did look good, but it wasn't a fresh bearish fair value gap that formed during the macro. It was already formed, and I had too many opposing PD arrays. I'd rather buy off of those instead of use them as a target, a profit target. I'm just looking and seeing, like, making sure I'm keeping my draws on liquidity valid. I didn't have nothing below that I was interested in price moving towards. So macro session started, we 4 minutes in, we still haven't gotten a fresh fair value gap that has formed during my macro session. So I'm still just standing by, just waiting. We're right here sitting at the consequent encroachment of this inverse bearish fair value gap. And I'm seeing this wicking reaction. I'm seeing these bullish algorithmic signatures. That's really confirming my bullish bias. And I'm really just trying to make sure I wait for a good point to take the buy entry. That is a really, really good indication that the buyers were in. I was waiting on manipulation. I was definitely expecting it. But as of right now, once this candle that's printing out right now, once that prints, that'll actually be my first true fair value gap that was established or created during the macro session So that's why I'm going ahead right now and starting to somewhat mark it up and just get everything prepared for me to go get hot and take a trade. So that's what we're looking at. Another thing that I'm noticing, when price started getting volatile, I didn't really let FOMO get the best of me. When price started moving with volume and volatility, I remain calm. I want to know everything from this week that looks better from last week. So I definitely feel like I look way more calm handling the volume and volatility from price. Way better than last week. So this fair value gap down here was the first fair value gap that was actually created during the macro. But this one right here, we're gonna see, we're using the ones that's the first one that's presented and mitigated as well, right? So this is the entry that we're looking at as of right now. We got a 3 candlestick pattern sequence with all of them being green. So I can go ahead and enter aggressively at the top of this bullish fair value gap, which is why y'all see me getting in with the limit order like I said I would. I went ahead and got it, my entry right there, and we immediately do go get stopped out. But this was the first bullish fair value gap that was presented and mitigated. So I didn't hesitate. I took my entry with conviction and aggression, and it's such a beautiful sight for me to see. Now, I definitely was anticipating a loss because I saw that we had 2 fair value gaps stacked against each other. Now, my thought process was that these 30 points stop loss is going to cover the full amount of this bullish fair value gap on that 1 minute. And if I'm were to lose it, then okay, cool. I just want to take another re-entry at the fair value gap at the bottom because my draws on liquidity were still towards the previous day high and the previous week high regardless. So I'm like, okay, if we lose, I still don't see price breaking all the way below this inverse bearish fair value gap on the hourly time frame because what does it want to go toward? So if I take a loss right here, I immediately want to get back in at the top of this bullish fair value gap that was also created during the macro session, and it was the first one that was created during the macro session. So I know this one has a good likelihood of working out as well. Right, 3 candlestick pattern sequence, all 3 of them being green. I can once again enter aggressively at the top of this bullish fair value gap. So I didn't think that this one had the best chances of winning, but I said, okay, I can take the trade and risk correctly and still give myself one more trade. I can give myself one more bullet, one more punch, and still come out of the day green, or at least break even. So let's see what winds up happening. So now I'm doing my trade markups. And I was definitely ready for that re-entry. I was expecting it. Another thing I want to notate really quickly as I'm watching this, I did a great job not micromanaging my trades today too. So I don't know if y'all noticed right now, I'm trading against a bearish hourly fair value gap. The only reason why I just let the trade run and I didn't just close it was because my draws on liquidity are still right here. So I'm like, okay, I was expecting to lose once I seen this bearish wicked reaction off of it, but I said, okay, I'm just gonna let the probabilities play out. One thing I understand is that once price hits these liquidity pools, once price hits this hourly bearish fair value gap right here, keep in mind we just inverse this one, but this is 1, now this is 2. At some point before we get up here, price has to retrace. It doesn't mean that price doesn't want to head towards my previous day high or my previous week high. It just means that it needs to get more power, volatility, more orders, of course, but just so we can keep it in terms where we understand the market needs to get a catalyst. It needs more power. It needs to get something that can catapult it all the way up here. And once it comes to this hourly bearish fair value gap, I'm understanding that this is a good place for price to want to retrace and gravitate towards some more internal liquidity and then push us all the way up here. So I'm already seeing that, okay, cool, I'm accepting my outcome. I'm accepting the fate, you know what I'm saying? I'm accepting the probabilities of trading right into this hourly bearish fair value gap. I love how I remained poised and I didn't overreact. I remained with my draws on liquidity, but I was already mentally prepared to take a loss because I'm trading against an hourly PD array. I was just waiting on price to at least get to my 1-to-1 and then move it to break even. But we never saw that happen. It just went straight to my stop loss. And I was just looking at where we were at, going right into that hourly bearish fair value gap. I'm like, okay, cool. I can see. Like I said, I just wanted to let the probabilities play out. I'm just scoping everything out, just looking around my field, looking around my charts, just trying to see, is there anything below that price could necessarily want to draw towards? I didn't want to take shorts targeting internal liquidity. I wanted to take the longs at the internal liquidity and head for external liquidity. So that was going on through my mind when I'm watching the trade go against me. I'm like, or when I'm watching the trade retrace a little bit. I'm like, okay, I understand that we can lose, but the only thing that price could want to go towards that is below is this fair value gap or the one below it. That's what I'm looking at right now. I'm mentally preparing to go ahead and accept the loss and understand, okay, price probably want to come down there. But I can tell that I know exactly what I want. I'm prepared for the worst. I have a contingency plan. I can look in my face and tell that I'm kind of a little rattled and a little flustered, but I know what I'm coming into the market looking for today. I know what I'm doing. I got trust within myself. Even though I did, I fucked up a little bit. I'm not going to lie. But I can look at my face and be like, all right. So, like I said, I already was expecting the loss coming off of that hourly bearish fair value gap. I wasn't trying to fight it or go against it, or I just was like, fuck it. Like, I can already see what's going on. So I was just accepting it instead of trying to control it or micromanage it. I know that would have just led me to just trying to control and micromanage everything else. So I'm like, okay, cool. My risks are correct. I risk correctly. I know where my turbulence came from. I know what pushed me like towards my stop loss. And my stop loss right here is basically another entry towards my main draw on liquidity. So I was already cool with that. Now, y'all gonna see me ego or revenge scale, and that's something that I don't like that I did, but it's something that I recognize and I'm just, calling it out. Okay, so we see as soon as I get stopped out, that
Stop field.
I get in right there. I know it's a quick entry, but I get in right here because this was the first bullish fair value gap that was presented during the macro session, and now it's getting mitigated. I'm taking my aggressive entry right here. I got 1, 2, 3 candlestick pattern sequence. All three of them are green. I'm taking it aggressively. I still have a break of structure up here. I still have bullish displacement. I still got the bullish fair value gap break and retest coming right on top of the inverse bearish fair value gap on the hourly time frame. It's another beautiful entry, and that's why I took that one.
Field.
And I'll remark everything else up as y'all about to see. Now, after that first loss, I do definitely start getting a little rattled, most definitely. I want to see what made me scale in even more emotionally right here. So that was the second. That was the first one that was presented, but it was the second one that was mitigated.
Order filled.
So I see what made me scale in. It was all of the bullish wicks coming at the top of this bullish fair value gap right here. That's what made me scale in. I'm not mad at it, but I'm not really supposed to be doing that. I love the fact that I was aggressive, but I know I'm not supposed to be doing that for real. So I got to be honest with myself. Like, yes, that was a good entry, but we weren't scaling in because something in our mechanical system tells us to. We were doing it because we wanted to make our losses back quicker, and we were being kind of greedy. So I got to be honest with myself about that. But even with me scaling in, I did handle it well by cutting the stops in half. Even though I didn't move it, I mentally had cut my stops in half and was planning to scale out after take profit one. So let's just see my management skills from these last 20 minutes. Now I'm marking up the inverse bearish fair value gap, showing how it's serving me as support instead of resistance now. And I don't know why this is bearish. Well, yeah, I got this marked up as a bearish one, but it should be bullish. So being that I know I'm oversized, even though I'm not like over leveraged, like for one position, I know I'm oversized. I lost 250 on one position, and now I'm in on 8 contracts, which means I'll lose the day down 750 if I were to take a full loss. So I know I'm oversized. So I believe I start cutting my stops in half and planning to scale out of this trade at 1-to-1, just because I know I'm slick gambling right now. I'm not gonna cap. It's really good technical analysis, but based on my heavy sizing, I'm slick gambling, and that's why I can't just walk away and detach 100%. The market is kind of like a pinball machine, right? 9:30 opening, right? We inverse this whole liquidity pool that we have, and we get above it, right? We had an internal liquidity with that bearish fair value gap. Price isn't just going to shoot straight up because it has to make money and it has to take money. So once it comes out here, the hourly bearish fair value gap is serving us as like a pinball machine. So now it's going to pinball here from that, which was like external at the time. We came from the consequent encroachment of the inverse bearish fair value gap. So now that bearish fair value gap on the hourly time frame that was above was serving as external, right? Now we reach that external liquidity that was above, we trade back into this internal liquidity right here before re-delivering back to the external above. So that's what I was just marking out. And I understood that when I got into the first trade, but we're exercising our edge, so we gotta take the trade. We have to exercise our edge. Like it's not about how we feel or what we want to do. It's the system. That's what matters. So y'all can see I cut the stops in half and I let the trade run. That way it's like, okay, if I do lose, it'll be 500 like I anticipate instead of 750. Stops cut in half. I got 8 contracts on instead of 4. I scaled in, and now we're gonna see. Now, even though the scale in, I'm pulling out the weed. I know I'm done. I'm done doing shit. Even though the scale in, I know it's driven off of ego, right? That's something that I said I want to do better. I want to control my ego more, right? That's something that I did mention. And once I get to start moving entries and stop losses and shit like that, I know I'm getting rattled. But I'm analyzing. I'm seeing, okay, we're getting a bullish wick coming off of a bullish hourly fair value gap. This is safe. This is safe. I just really had to trust my bullish algorithmic signatures. So boom, we deliver out of that bullish fair value gap beautifully. And now I'm like, okay, we definitely gonna move our shits to break even. Beautiful execution right there. We moving to break even. Before we hit TP1, we moved to break even, but we were oversized, so I get why. Right now we're at break even, and let's see, do I choose to scale out or not? I'm still holding heavy. I'm still holding hot right now because I'm trying to see is price going to give us some more delivery outside of this bullish fair value gap. So I'll hold on to it. I should have probably instantly closed out 4 contracts just off of GP, being that we took 1 loss, but I was really fearless today, and I love that from watching this trading session. I don't seem like I was rattled or all over the place. Like I was very, very much poised and looking for what I was looking for, executing according to like my convictions and my drawn liquidity. So I really am enjoying watching this session. I'm not talking, I'm not saying anything. I'm just full flow mode executing. It's a risk-free trade at this point, so I ain't have nothing to lose. And then I started checking my profit so I can see like, all right, how do I want to manage right now? Okay, so I let that bullish fair value gap play out or do what it needed to do. I let that little price action move. I'm like, all right, we're gonna hold on to it. We're gonna wait and we're gonna see. But I'm still keeping in mind that we are trading into this hourly bearish fair value gap. So that's why I'm monitoring price right now so closely. I said something that I wanted to work on from last week was being more strategic, surgical, and like mechanical versus optimistic and hopeful. Even though my profit target is a 1-3 at 90 points and I do have draws on liquidity above, it's 10:14. The macro is over with in 15 minutes, right? So I just took a loss. I'm in a new position, double the size of what I originally lost. So I'm really over leveraged if I'm being 100% honest. I've made back my losses, and on top of me making back my losses, I'm sitting in profit on top of that. And right now, I'm not getting any strong displacement moving through this hourly bearish fair value gap. So I'm thinking in my mind, what is going to preserve my mental capital the best? What is going to serve my mental capital the best? Let me take something off the top. because I don't want to just be hopeful that we deliver all the way through that hourly bearish fair value gap to my TP2 or to my TP3. Let me take something what I got and clean up. I don't even like using the word clean up. Let me manage my risk the best way possible based on the current situation, not based on what I want to happen or what I'm waiting on to happen. What is happening right now, and let me respond to that. Not react. Let me respond to what I'm seeing. So I'm thinking, okay, the trend could be continuing. And I love how I made it easy for myself to just come back and watch my film without all the extra over trading and dumb shit. I love that. So I scale out right here once I'm starting to see that we're not pushing above this level, this low supply area. We're not pushing above this level with strong volume, with bullish volume or displacement. So I'm like I just said, I'm down. I'm trading against an hourly bearish fair value gap. I recover some of my losses. Let me take something off of the table so whatever happens, my account is still in good standings, right? And I think from here, I walk away for a little bit as well, right? So now it's really like a risk-free trade. Regardless of what happens, I can't lose. I can't lose money for the day. We good. So this is just discretion, the discernment, even just trading experience. We were trading against an hourly bearish fair value gap. We're creating a double top. I'm getting bearish algorithmic signatures, and we're starting to print bearish fair value gaps. I'm like, okay, I don't want to sit here and be too hopeful about this going all the way to my 1 and 3 at this point. Let me just see if it hits my break even and go on about my business. But we got 10 minutes left, and I remember what happened and why I made my decision, but I'm going to let it play out. I'm looking like, yo, my shit is it's not quite exactly at break even, but it's at my entry point before I had scaled in. So, like, I'm not going to, I'm not going to lose no money today. I'm going to be good regardless. Worst case scenario is that I'm break even. So I'm glad at the decision not to close the trade fully. I'm glad at the decision to leave the trade with half my contract sizing and let break even get hit or not, because we're pro trend and we have draws above. So I'm glad I didn't just automatically close, and I'm giving price a chance to get through this hourly bearish fair value gap. I'm going to show y'all once I choose to just go ahead and close. See, I really wanted to scale out some even more positions right there, but I'm glad I didn't, because it would have made me even more emotional. So I just let the trade run and I walked outside, of course. So we let the trade run. I'm trying to leave it some opportunities to at least get up to my 1 and 2, right? But this is the key thing that I'm noticing right now, y'all, and I'm going to explain. It's 10:22. It's 2 minutes after my macro session. We are still trading into an hourly bearish fair value gap, and we aren't getting any good, strong, bullish momentum. So I'm looking at this candlestick sequence right here. 1, 2. I'm like, all right, we dip down into this hourly bullish fair value gap. We have this bearish wick at the bottom pushing us back outside of it, and right now we're currently sitting inside of this imbalance. But the opening of this candle, right, is above the close of this candle. So I'm like, okay, cool. As long as this candle stays flipped above this candle, I won't have to worry about like getting outside of the trade. But if I see this candle flip below this, if I see this candle do a flip, right, like we got like 30 minutes or something left, then the likelihood of it hitting my break even or the likelihood of it hitting my stop loss it's more likely for us to do that before it reaches my draw on liquidity than it is for it to reach my draw on liquidity first. So that's what I'm looking at. So in order to avoid this candle flipping down on me and going all the way back to break even, I just move my stops right there to my TP1, and it's just like, okay, I'll close my full position if we happen to flip, because we're outside of the macro. We should be able to just go ahead, and it's not like this is the 90-point target. This is the 60-point target, right? So it's like we should be able to get above these highs and go ahead and get to where we're going to go. It's right after 1020, 1030 is coming up. Like, let's go ahead. Being that I wasn't seeing price look like it want to do that, I was understanding that price may want to give us another entry down here during the macro, or price may not want to deliver to our draw on liquidity until the second macro. So in order to be strategic, to be surgical, to be methodical instead
Stop
of
field.
hopeful and optimistic, I just pull my trade right back here, and I'm good.